You are listening to the Cresco Wealthcast, a podcast brought to you by Cresco Wealth Management of Wellington Altus Private Wealth. I'm your host, Dimitri Korolis, and I wanted to bring a podcast from the world of wealth that was really just easy to follow. And from time to time, I'm going to be bringing in members of the team. We'll be bringing in external guests and really providing some good information that are inspired from those coffee talk conversations that not just we're having, but that you're having as well. You can follow the podcast on www.cresco.podbean.com, or if you're on Spotify, you can just search for the Cresco Wealthcast. And last but not least, please do not forget to subscribe to my channel on Instagram, which is at the Finance Greek. Okay, as promised, we are back. You are listening to the Cresco Wealthcast. I am your host, Dimitri Korolis. I'm back with Wayne Boer, our senior financial planner. We've been focusing on insurance and talking around it just because it's such a vast topic. And so in the last episode, we did life insurance. We really wanted to segregate these items. Today, we're going to be talking about disability and critical illness. And I think, Wayne, if you wouldn't mind, same style as we did last episode, if you could kind of give us an overview on this disability, critical illness, and go through the types and the purpose and the know-how, and we'll take the convo from there.
Yeah, sure thing. So what do you want to start with?
Let's go critical illness. CB comes before D.
You know your alphabet.
I told you, second smartest in the room, right?
All right. So critical illness insurance. It's actually one of the types of personal insurance that not many people have. It's important. What critical illness insurance does is it insures you against coming down with either a sickness or an illness that's covered in a contract. And if you do get diagnosed with one of those illnesses and you survive the survivability period of typically about 30 days, you will then get a lump sum benefit from the insurance company. And that lump sum benefit will depend on what you ask for coverage. It could be $50,000, $100,000, you name the number, and that's the check you will get if you meet the conditions and if you survive for that 30-day period.
Here's a question for you. Someone might say, well, why do I need to look into critical illness? I mean, I have a life insurance policy. Critical illness is in there anyways. Is it or is it not?
Well, I guess you could say it is if you pass away from that illness. But most of us get diagnosed with something and we hope that doesn't happen. So then what happens? Yeah. What happens instead then is we say, okay, how am I going to get better? What am I going to do? Because there's nothing more valuable to either of us, and probably anyone who's listening, than our health. Our health, it drives our quality of life, our ability to earn an income for our family, our ability to save for the future. What you can then do with that lump sum benefit is you can take time away from work, for example, to go get better and not have to worry about a loss of an income, especially for those who don't have disability insurance, which we'll be talking about soon. Even if you do have disability insurance, you may have cancer and your partner may need to drive you to appointments. Well, now they face a loss of income, so your family is still negatively impacted. In some cases, you may have paralysis. You may have to retrofit your home or renovate your home to make room for a wheelchair. You can do that with this benefit. You can seek treatment elsewhere if you need to. Maybe there's some sort of experimental treatment for an illness that's not covered through Alberta Health or whatever provincial plan you may be covered by. Well, now if you have $100,000 or $200,000, you can take that money and you can go somewhere that will provide that service, but it's not reimbursed by the government.
Yeah, interesting. So in the last episode of the podcast, we talked about terms and duration as it pertained to broad life insurance. Same thing here?
Yeah, so great question. You can structure these policies pretty much however you want. We will see term 10s, term 20s, we'll see term 65s, we'll see term to age 100. And all that really means is you can lock in your premiums for those periods of time. So with the term 10, just like with the life insurance policy, your premiums will be level for 10 years. And then the policy resets. It continues, it doesn't stop, but it resets at year 11 with slightly higher premiums to reflect the higher risk. Right. And the same thing with the term 20. Where we start to see some differences is with, say, like a term 65. Those premiums will be level from the date of issue all the way to age 65.
Okay.
And same goes with like a term 100. Now, you can also put permanent coverage in place if you want to.
You're just gonna, that's
Yeah.
my next question
Okay.
on it, yeah.
Yeah, so again, with a permanent policy, critical illness, kind of like a life insurance policy, you can pay it for the balance of your life if you want to. You can stop paying at a certain age depending on what the insurer offers, or you could do a limited payment option, for example, where it's paid up in 15 years, for example, where you make the payments for 15 years and then the coverage exists for the rest of your life.
Yeah, excellent. Okay. And so let's go into some of the details and the features or things that we're missing. Like in the last one, we talked about features and riders at the point that you're creating the insurance or at points that life changes. But what are some notable features that we should be very mindful of? I think you tackled it a bit when you're talking about paralysis and other critical illness events that happen. But some of the features there within that we should be mindful.
Yeah, so keep in mind that these features are going to change a little bit from insurer to insurer. There's no one set of features that applies to every policy everywhere at all times. But some of the things that you'll see, choices you get to make when you build out your own policy. For example, you might have a return of premium. So critical illness is kind of interesting in that insurers will offer you a refund of the premiums you pay into that policy if you never make a claim on it. It's going to depend on the type of policy. It's not available on every policy. But after, say, a 15-year period or a 20-year period, if you want, and you've determined you don't need the coverage anymore and you've never made a claim, the insurer will actually let you cancel the policy and give you back all of your money that you've paid into it. So it's kind of a no-risk way of having that critical illness coverage. Mm-hmm. The only real cost for you in that situation is really the opportunity cost of not being able to invest that money in the meantime to do something else.
Yeah, I want to touch on that too, because whenever we're faced with lump sums or just money in general, it changes our perception and our decision making. And so let's say I'm going to throw an arbitrary number out. Someone is now 45 years old. They got insurance at 30, 15 years, they're 45, and they're staring at $50,000, $100,000, whatever the number is. But it looks appetizing. What should we really think about here in terms of, do we take it? Can we apply it somewhere else? Do we keep it in place? What should be the questions we should really be asking at that situation?
In those situations, the question should always be, what is the reason I have this policy in place for? What was the reason I put it in place for originally? And does that risk still exist? So if I was 45 or 50 and I had a policy that I put in my 15 years and I could cancel it and get my money back, what I would want to think about before that is, okay, if I do that, my policy's gone. What's my risk if now I get that call from my doctor saying that they ran a test and I have something? What does that mean for me? Does the risk still exist? Because now if I want to, go seek treatment elsewhere, how am I going to fund that? Do I have the cash on hand to do that I'm willing to spend? Will I now be accessing my retirement capital in order to fund costs that maybe aren't covered provincially, or it'll take me too long to get that treatment? Those are the types of questions I would start asking myself before canceling that to get that refund back. The refund of premium, don't get me wrong, it's a nice feature. If you genuinely believe you will never get sick and you will not need that, but you see the reason for that lump sum benefit, just ask yourself, does the risk still exist? And what would I do if I don't have the coverage?
Yeah, fair enough. And that, thanks for doing that, because those are big decisions that are impactful decisions. But when you're staring and we see certain numbers, sometimes it can change. It can change the game. Is it a good time now to move on to disability, or is there something that maybe we've missed in the critical illness whirlwind that I haven't asked?
No, I think the last thing I'll talk about with critical illness is just for those that are listening that are maybe running a business, things like that. It's easy for me sometimes when I talk with individuals to say, what does it mean for your family if you get sick? And that's a legitimate concern. But when I sit down with business owners, what happens to their business if something happens to them? If they get that diagnosis and they have to step away from the business for 2 months. So critical illness can not only have an important part to play in our personal overall planning and protection, but also when we look at our businesses. Maybe if you need to step away from your business, you need to bring in a replacement for a while. You need to find someone. You need a cash inflow because sales are going to be negatively affected if you're not there to generate sales. So don't, when we're thinking about critical illness, there's the personal side, and then for business families, just like with life insurance, there's also the business side, and in many cases, it makes sense to look at having both.
Okay. No, that's great. Thank you for that. So let's move on to disability insurance. And first and foremost, because I think this is the one that people hear the word, they think they know what it means, or they have an idea of what it means. But what does it actually mean? What is the actual coverage and expectation when we're talking disability insurance?
So, disability insurance is a monthly tax-free benefit that you receive from an insurance company if you are unable to work. So when I'm talking about a personal disability plan, that's what I'm talking about.
Side note, this is what I love about you. Just simplify it. That's why I bring it up this way. I can't stress it enough for all those listening. This is the easiest dissemination of info, Wayne. Thank you.
So that's on the personal side. I can't speak necessarily on the group side because every employer is different. But on a personal side, that's what we're talking about. When does it pay out? Well, a disability insurance policy will pay out if you are unable to work your regular occupation, your own occupation. There's a number of different definitions, but if you're unable to work and earn an income, it will then pay you that benefit after you've met what we call an elimination period. In insurance, you can think of an elimination period kind of like a copay or a deductible. An insurance company is going to say, is after 90 days of you being without an income, we will then start to pay you. What's the magic of 90 days? I mean, that's a question I often get. Okay. And honestly, you can pick whatever period you want. You could do 30 days, 60 days, 90 days, 120. You could do 2 years. The insurance companies offer all sorts of options. And the longer your elimination period, the cheaper your policy premiums will be because you're assuming a certain amount of risk. The insurance company knows that if you haven't earned an income in 90 days due to you being sick or having been in an accident, you probably legitimately need the money. If you had a shorter elimination period, 30 days, I mean, I could go skiing this winter and I could break my leg and be home for 30 days and my disability policy has to pay out. So that longer elimination period is a key part of a disability insurance policy as well.
That's a good. Okay, so I'm sure if you had a nickel for every time you hear this one, Wayne, why do I need disability if there's employment insurance, WCB, any type of compensation scheme of that nature? What's the answer to that, or the conversations to that?
I personally like to be in control of my own financial future. If I'm reliant on WCB, my group benefits, I've lost that control. I've lost the ability to make my own decisions. So WCB, what happens in that example I just gave of going skiing?
Yeah.
Well, that's not an at time or an at work incident. I will not be covered by WCB for that. If I take a look at my group plan, I've said this to clients before. I may have said it here on the Wealthcast. Group insurance is put in place by employers as a perk for employees. It's designed to give reasonable coverage to many people at once as efficiently, cost efficiently as possible. So there will be trade-offs in there. And oft we'll see within group benefits plans, they may not be as robust as what a personal plan is. And for that reason, I wouldn't suggest people rely exclusively on their group plan.
Again, terms, duration, same principles apply here to disability coverage?
Yeah. So when you take out your policy, you can often choose the amount of time that your benefit will pay out for. So that's one side of it. For example, you could have your benefit pay out for 5 years. You could have your benefit pay out to age 65. You've got some options with how you build it out. Okay. And then your premium structure on that, Dimitri, your premium structure will typically be level from the time that your policy is issued all the way until the policy expires, which happens at retirement age, which is age 65.
Yeah, absolutely.
And policies will not typically pay out beyond age 65.
Okay, let's stay on the group train. Pun intended, I guess. Let's take us through that. Take us through the benefits, the pros, the cons, because you just said, and I think it's very important for people to understand when you're talking about a group, it is done for a particular group of people in mass, and there could be some trade-offs. Why don't we go down that rabbit hole a little bit, Wayne, if you don't mind?
Yeah, so some things that I look for when I'm taking a peek at someone's group policy is I want to figure out, is the benefit taxable or tax-free? I know some employers will take on the risk themselves. They don't use an insurance company. People don't see a line item on their pay stub saying long-term disability premiums. Well, if your employer is paying those premiums on your behalf, any benefit you receive will be taxable. So if you're only getting 70 or 80% of your pay, and then it's taxable and you lose another 30% of that, you may quickly find that on disability, you're only getting 40 to 50% of what you might need on claim. So that's one thing I'll look at. Another thing that we have to look at with group plans, Dimitri, is we need to take a look at what are the definitions in the policy. And this is where we often get, people come in and they talk with me and they say, insurance companies, they're always out to get you. They never pay, and my typical response to that is insurance companies will pay 100% of the time as long as you meet the definitions. Why are definitions important? Well, because for a group plan, you need to watch things like what income is covered. If you're a commissioned employee, are your commissions covered or is it just your base salary? If you count on, if you're getting things like share compensation through the form of options, restricted share units, performance share units, those are probably not covered by your group plan. But if you're not able to work, you're not earning those anymore. So we need to look at the definition of income, what's covered. We need to look at the definition of disability. So on a personal plan, the type of plan that I have, what it will often say is, as long as you're unable to perform the key duties of your regular occupation, then we will pay. Some specialists, like surgeons, they might have an own occupation definition, which says, if you cannot do the core duties of your exact occupation, we will pay. Now, a group plan will often say, if you cannot do your regular occupation for 2 years, and then after 2 years, if you cannot do any occupation, then we will continue to pay you. Well, that could be a big change, and people aren't necessarily aware of that. It may also be an all or none benefit. So maybe you could work 4 hours a day because you have migraines. And then, some personal plans will often have partial or residual disability features, which will pay you if you can't work a certain amount of time or you lose a certain percentage of your income. You don't see that with the group plan. So those are some of the most common types of trade-offs that you'll start to see. in addition to some of the riders and options you can add on to it that you can do with a personal policy, but not with a group.
Okay, and maybe that's a perfect segue into those riders and features. But right before that, and this is why, and I'll say from, from my side as well, a lot of the conversation is, oh, well, I have that group plan. Plus, Dimitri, it's very cost effective. It's super cheap. The company provides it. And point in case here. So thank you for detailing those things out.
Yeah, and one thing though I will say to that, just before we jump onto the riders and features, Dimitri, one rider you can have is something called a group offset. And so that's where someone like me might work with someone like you to build a disability plan for you that pays out when your group plan doesn't. So maybe when that definition of disability isn't met with your group plan, but it is on a personal. What sort of discount do you think you might get? And they'll give you a discount for having this group offset on your personal plan. Some people might think, oh, well, that should make my personal plan super cheap because there's no way that's going to pay out. And I would say the discount you get on that,
Yeah.
10%. And people are shocked. They say, what a ripoff. And I say, well, that's just the insurance company's claims experience with how often people actually need to claim on their personal plans while also claiming on a group plan. So keep that in mind.
Yeah, no, that's great information. Let's talk about these features. Let's get into the devil of the details with these features and different riders that we've discussed with other ones, but as it pertains to disability insurance.
Yeah. So some of the things that you can do with a personal plan, you have your base benefit. So let's say your base benefit's $5,000 a month. And you say that's a reasonable amount of income for me based on how much my family needs right now if I were to be disabled. But I'm at the early stages of my career and I expect to make more as I progress through my career. Well, you can buy additional insurance. So what you can do is you can say to the insurance company, I want to be able to buy another $10,000 of monthly benefit without providing you with insurability proof in the future. So you can do that. That's one common rider that we'll see. And I think that's very important in the early stages of your career. Other features, cost of living. I mean, we can see that right now all around us. Inflation impacts everything. So a cost of living adjustment rider will allow your monthly benefit once you go on claim to go up with the CPI. So that's another feature we might see. Once you get past that, there are a bunch of riders that I consider optional, but depending on your situation, they might be nice to have. Some insurers offer a compassionate leave. So if I were on, or if my wife were to become sick with a certain type of illness and had a certain prognosis, that rider would allow me to go on claim for myself for up to a year to take care of my wife. I think that's a really neat one. You can add on retirement contributions. So you can get up to $1,500 a month, or I guess that's one insurer, but you can get money saved for your retirement while you're on claim. Some insurers offer a partial refund of premiums so that if you pay into your policy for a certain number of years and you've gone without a claim, at the end of that period of time, you can get half of your money back. I forget what the percentage is exactly, but you can get a certain percentage of the premiums you paid into the policy paid back to you. So those are some of the types of things that we'll see when building out a policy. Often I'll talk about these options with families, Dimitri, and they'll look at me and say, well, which one should I get? And honestly, I think that's the great thing about a personal policy is we can put on just the ones that are important to you. If you were a younger person with a lot of income growth ahead of you, I would say you need to make sure you've got that additional insurance and that cost of living because inflation over the time that you're on claim can be significant. Whereas if you're in the later stages of your career, maybe you don't need those things, right? So it's all going to be dependent on what you need.
No, and I love it. And to close with the question, last episode about life insurance, today about critical illness and disability, and all the points are all relevant points at some point in time for potentially for someone or family thereof. And what's the difference, or what should people be looking at where they say I need to be insured versus, well, I think I'm self-insured because if something happens, I got enough, I think, in the bank to take care of it, and maybe I don't necessarily need the disability insurance, for example. What's that conversation look like, or a takeaway for people to wrap their heads around how they should be thinking about that conversation?
With most insurance, we often talk about needing to do a needs analysis, and that's sort of our starting point. If you're trying to think of or trying to determine if you're self-insured and you don't need disability insurance, my question to you then, Dimitri, would be: are you ready to retire tomorrow? Because that's effectively what's happening.
Yeah.
Is you're being forced into retirement. Do you have the capital you need to pay off any outstanding debt and to fund yourself till you're age 95 with what you have? If the answer to that is yes, and you have enough to fund your other goals, whether it's leaving an inheritance or a legacy for your children, a charitable bequest, if the answer to that is yes, you're right. You may not need disability insurance. And that's a good spot to be. And I would say congratulations. I look forward to be there myself someday.
Yeah, absolutely. And thank you for, and I think that's very important because like we talked about earlier with the critical illness where you get this sticker shock of a number. Some people, I find, they may look at a number, but what does that number mean and how should they be approaching it? That I use the $1 million because $1 million is almost a pop culture term. I got $1 million in the bank, I'm good. Well, probably, as you talk about inflation, time value of money, and all of these different factors, it can mean a lot of different things and not mean what it once meant at the time you make the decision. So I really like the way you clarified that.
Yeah, and so there's often two questions that I find especially poignant for people when we start talking about disability insurance. The first one is, I'll sit down and I'll ask someone, what's your most valuable asset?
I like that. Yeah.
And without fail, everyone looks and says, oh, my house, oh, my business, and they'll pick a thing. And I'll have to look at them and say, no, it's not. It's your own ability to earn an income. You are your greatest asset. Why would you not insure that? Sometimes if we look at disability premiums, they can look high at a monthly dollar amount, depending on age, amount insured. But we have to remember that if you're in your 30s, 30 years of making payments at $60,000 or $100,000 a year, that adds up. Like that, yeah. That is you are an expensive asset that's being insured, and the premiums reflect that. So that's the one thing, the one question that I'll often ask people. And the second one is, if you were looking for a job and you had 2 job offers on the table in front of you, one of those jobs was for, I'll pick an easy number, $100,000 a year. But the minute you're unable to work, you get nothing. And then the other job, Dimitri, paid you $97,000 a year. But if you were unable to work because of an illness or an injury, you would then continue to be paid until you were retired. All things being equal, which job would you choose?
Which ones are paying these jobs, Wayne? I'd like to know. I'm just kidding, but very well said. And when we talk about behavioral management, a lot of times it just goes into the context of a portfolio or the markets, but we have to look at it everywhere. And I agree. Like if you took the name out of you and I, all we are income producing assets, respective to our worlds.
Our human capital.
We're just human capital. And so to look at that return, that return on invested capital is a big thing. But yeah, I would take the 97, I would. Yeah. In the grand scheme of things, you don't miss it. And the 3,000, I would say in 20 years, that's still going to be the cost of a Starbucks.
Yeah. Yeah. But the difference in that situation is typically if we've been in that $100,000 a year job for a while that hasn't had that 3,000 come off, it hurts to then give up that 3,000. Whereas if we never had it in the first place, you would never miss it. So that's important to keep in mind. And I think that's especially true for families that are higher earners. We work with a lot of professionals who, whether they're engineers, lawyers, even if they are covered under a group plan, maybe they did have that job that paid 97, but would cover them if they were sick, or got in a car accident or something like that. Those people also have to keep in mind that those group plans, they're not necessarily geared for higher earners. So even though you took the job that was going to pay you, you may find that there's maximums, and you may find that your family's needs are higher than what those maximums are paid under the plan. So you may still need coverage on top of what that job offered. And even those who took the job and they see in their group benefits booklet that they have got, I don't know, 8,000 a month of coverage. Well, sometimes you'll see these, going back to our previous part of the conversation about definitions, you'll see subject to an NEM of $5,000. Well, what does that mean? Well, that's non-evidence maximum. So they think they have 8,000 of coverage, but you only have 5,000 of coverage up until you do medical underwriting with the group provider, and that's how you get up to 8,000. So again, my parting words, I guess, for people who are listening to this about disability insurance is, if you're relying on a group, I'm glad that you have something, but it's still worth taking a look at it, pulling out your group contract, reading through the definitions, see what it actually means for you based on what you earn, what are the payout rates, things like that. And if you still have a hard time making sense of that yourself, reach out to us here and let us give you a hand to see if it's right for you.
Yeah, and at the very least, just a needs analysis. And Wayne, thank you so much for your time, because in all, a takeaway I'd love for the listeners to understand is, when we say we look at wealth management in its entirety form, is that we're taking everything into consideration, and that insurance is not a product push, but it's a solution to a household, to an individual, to a situation, and it should be a problem solver, and filling in those gaps. And a lot of that comes with looking at financials, employment, and really what I love what you did today is really the X factor about people's individuals' lives and what's important to them, and having human conversations to be able to understand what we actually need, as opposed to, let's make a phone call, I'm 30 years old, I need insurance, and just please tell me, give me $1.5 million and we're done with it. So I really thank you. Any parting words on this topic here?
No, these types of policies, critical illness, disability, they're about protecting what's important to you, and trying to find a way to do it that gives you the coverage you're comfortable with by paying an amount that you can afford. And there's lots of flexibility and solutions in the market to help you do that.
Love it. And who says insurance talk can't be fun? No, Wayne, thanks for your time. This was great. And of course, reach out to us any questions that you have. As we said before, you can go on CrescoWealthManagement.com. You can find Wayne's email address, myself. You can also, or the team inbox as well. It'll all be well received. On the Instagram channels, at The Finance Greek and at Cresco Wealth Management. If you're someone that likes to message on the social media, we're there as well.